Hi, we've reached the end of our fiscal year. We have our trial balance for Apollo Inc., as well as our income statement, statement of retained earnings, and balance sheet. Now that we've closed out the year and produced our financial statements, there's only one thing left to do, our closing journal entries. The closing journal entries allow us to close out our revenue, expense, and dividend accounts so that the balance is zero. The reason we do that is because we report these three accounts, or net income and retained earnings, for a specific period of time. So when we start a new year, we need to start with zero. So for example, if on December 31st we have net income, in this case of $15,000, the next day when we come in January 1st, we should have zero net income until we do a new transaction for that year. That way, our net income doesn't cross over fiscal years. It all gets reported in the correct period. Okay, there's 4 steps we need to do to close our journal entries. And we're going to be using an account called Income Summary. We use this account exactly once a year for 3 journal entries, and then we never look at it again until the next year. When we're done with our 3 journal entries, the balance in Income Summary will be zero, and that's why we'll never see it reported on our trial balance or our financial statements, because it's always zero except for the 20 minutes it takes us or less to do our closing journal entries. All right, so let's get started. The first step of our closing journal entries is we are going to close out revenue to Income Summary. So I'm going to go look at my trial balance. And it looks like revenue has a credit balance of $35,000. If I want that account to be zero, then I need to debit revenue $35,000, which is what I'm going to do. Debit revenue, $35,000, and then I'm going to credit this account called Income Summary. This will be one of the 3 journal entries. All right. Now my revenue account will be zero. The next thing I need to do is close out my expenses to Income Summary. My expenses have a debit balance of $20,000. So in order to close out that account or make it zero, I need to credit expenses $20,000. So I'm going to credit expenses for $20,000. And the offset will be to Income Summary. So I'm going to debit Income Summary, $20,000. Okay. Now I need to zero out my Income Summary account. I've got a credit of $35,000 and a debit of $20,000. So currently there is a credit in my Income Summary account of $15,000, exactly the amount of net income. So that's going to be a credit balance. I want to zero out Income Summary, so I'm going to debit Income Summary for $15,000. And I'm going to close out Income Summary to retained earnings. So I'm going to credit retained earnings for $15,000. All right. I've done my 3 journal entries with Income Summary. They're all done. My Income Summary account is now zero. My final closing journal entry is I'm going to close out dividends to retained earnings. My dividends have a debit balance of $3,000. So to close that out, I need to credit $3,000. So I'm going to credit dividends $3,000. That makes my dividend account zero. And then I'm going to debit retained earnings for the same amount. Okay, those are my 4 closing journal entries. Now that I've done that, my revenue account is zero. My expenses account is zero, and my dividends are zero. So when I start my new fiscal year, any transactions I make will be the only ones in that account. And that way, when I go to close my books at the end of next year, the only items that will show up in my income statement and dividends account are the ones that actually relate to this current fiscal year. Okay. One last thing to point out. If you look at our statement of retained earnings, we have beginning retained earnings, which we carried forward from last year, plus net income. That's the $15,000 that we credited to retained earnings. Retained earnings is an equity account, and so we increase it with a credit, and we did exactly that. Then we're going to decrease retained earnings by $3,000. We debited retained earnings because retained earnings has a natural credit balance. The debit decreased retained earnings, which is exactly what we did here. And that gives us our ending retained earnings of $22,000. All right, this concludes the lesson on closing journal entries.